Institutional money is shifting gears in the crypto market. Data from CME Group shows XRP futures gaining adoption among professional trading desks, while Solana futures have crossed $1 billion in open interest in just 5 months. That pace has already outstripped the early growth of Bitcoin and Ether futures. Stay ahead of institutional crypto trends by subscribing to CryptoPeak, your source for clear and factual market analysis. Section 1. The role of CME Group. The CME is not just another trading platform. It's the largest derivatives exchange in the world, trusted by hedge funds, pension managers, and asset allocators. When CME lists a product, it sends a signal. This asset has enough credibility, liquidity, and demand to warrant a regulated derivative. Bitcoin futures in 2017 and Ether futures in 2021 were milestones. But the rapid uptake of Solana and XRP futures suggests a new era, one where institutions are willing to explore altcoins within a tightly controlled environment. Section 2. Why Solana's growth is different. Open interest crossing $1 billion in just 5 months is not random speculation. Solana has become the fastest-growing CME futures product in crypto. Several drivers explain this. Solana has seen an explosion in on-chain activity. Its low fees and high throughput have attracted decentralized finance protocols, NFT projects, and more recently, a surge in memcoin trading. For institutions, this growing activity creates narratives they can trade around. Solana has bounced back from reliability concerns. Network outages plagued it in earlier years, but recent upgrades have stabilized performance, allowing institutions to treat it as a legitimate chain rather than a technical experiment. With Bitcoin and Ether futures already mature, Solana represents fresh ground, a high beta asset with strong community support, listed on a trusted venue. Section 3. XRP's institutional comeback. XRP's inclusion on CME futures carries a different weight. For nearly a decade, XRP was in limbo due to its legal battles with the U.S. Securities and Exchange Commission. The partial court victory clarified that XRP sales on secondary markets are not securities, reducing legal uncertainty. This has opened the door for institutions that previously avoided XRP due to compliance risks. Its adoption on CME is a signal that large-scale investors are now comfortable with exposure. Beyond legality, XRP still has a global payments use case. Ripple's partnerships with banks and cross-border payment providers give XRP futures an appeal tied not just to speculation, but to infrastructure. For institutions, this is attractive: exposure to an asset with real-world settlement usage. When Bitcoin futures launched, adoption was slow and cautious. The asset was volatile and misunderstood. Ether followed the same cautious path. Solana, however, has rocketed past $1 billion in open interest almost immediately, which indicates two things. The institutional infrastructure around crypto is more mature, and there's genuine demand for regulated altcoin exposure. XRP's growth curve is steadier. It reflects institutions' careful entry after years of legal battles. This steady adoption may prove more sustainable over the long run, since it's grounded in clarity rather than hype. The rise of XRP and Solana futures signals 3 important shifts. 1. Institutions are no longer confined to Bitcoin and Ether. They are open to exposure across multiple blockchains if the right regulated products exist. 2. The narrative of only Bitcoin as digital gold is evolving into a portfolio of crypto assets with different roles. Bitcoin may remain the hedge, Ether the programmable platform, Solana the high-speed ecosystem, and XRP the payments asset. 3. Futures demand reflects a deeper confidence in crypto's permanence. Institutions do not build positions through CME without a long-term view. Why are futures so attractive? Futures allow hedging, risk control, and leverage. A hedge fund can go long on Solana tokens while shorting Solana futures to protect downside. A pension fund can gain exposure without holding the asset directly. This is critical. Direct custody of crypto introduces security and compliance risks. But through CME, Institutions get exposure without custody headaches. This makes futures the preferred entry point for cautious money. Despite the optimism, caution remains necessary. Regulation is still evolving. A shift in U.S. policy could change the playing field overnight. Solana's technical past is not forgotten. Outages could return, undermining institutional confidence. Liquidity can be misleading. $1 billion in open interest sounds broad, but it could be concentrated in a handful of large players. That means markets could thin out quickly if sentiment changes. Finally, the macro environment cannot be ignored. Rising interest rates or a sudden risk-off shift could drain liquidity from futures markets across all assets. The growth of XRP and Solana futures is more than a headline. It's evidence of crypto's expansion into a multi-asset institutional market. Solana's rapid rise to $1 billion open interest shows the hunger for regulated exposure to alternative blockchains. XRP's steady adoption highlights how regulatory clarity can unlock institutional demand. Together, these futures tell us institutions are reshaping their approach. No longer satisfied with Bitcoin and Ether alone, they are building diversified strategies across multiple crypto assets. What do you think? Are Solana and XRP the beginning of a broader institutional push into altcoins? Leave your thoughts in the comments. Share this episode with colleagues watching the space. And don't forget to subscribe to Crypto Peak for more factual, in-depth crypto analysis.